guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be profitable and successful in the markets, which is why we are doing these training tutorials. Today, the Forex training is going to be about trends. So the market will be in three states. Okay, it will either be in an uptrend, okay, a downtrend, or a sideways market. If I could ask you to subscribe to the channel, guys, and like and share with your friends, that would be greatly appreciated. So let's take a look at some examples. As you can see, guys, on this picture, on the left here, we've got an uptrend. So we've got higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This makes an uptrend, okay? And this purple line acts as a support line. Then the market, we can see, is going sideways. There isn't a new high or a new low made, so it's just a sideways market. And then on the right of your screen, you can see we have a downtrend. Eventually, the low is broken, and then we have a new lower low. Lower high, lower low, lower high, and so on. This is now a downtrend. Obviously, in the markets, the charts rarely look this clean. Yeah. So let's have a look at some real life examples on the charts. Let's look at some examples on the live charts of uptrends, downtrends, and sideways markets. In reality, they're not always as clean as some of the pictures we showed you earlier. They're not as easy to read, but we can understand the market structure. So this is the Euro US dollar, the daily chart. So if you look at my arrow, my cursor, you can see price comes up, creates a high. Then it creates a low, it creates a higher high, a higher low, a higher high, a higher low. All right, so it's an uptrend. Yeah, by definition, higher highs and higher lows is an uptrend. Okay, but then the market doesn't create a higher high. So then we have to ask ourselves, you know, is the market structure about to change? Okay, and the most important level that we look at is the last low. So this area here was the last low. All right. Sure enough, it doesn't create a higher high, and then this large red candle breaks this low. So we now have a lower low. Okay, so we could start thinking it's becoming a downtrend. All right, and then sure enough, you can see market structure breaks down. It creates a lower low, and then we have a lower high, a lower low, a lower high, a lower low. The market is now in a downtrend. Okay. What's interesting here is market now comes up to this last high. All right, let's highlight that here. So the market now comes up to this last area, this high area here. All right, but it doesn't break this area. Yeah, and as you can see, if you remember from my last tutorial, you can see here on this candle that sellers are back in control, and sure enough, the market is taken lower and the lower low is created. Okay, we have a lower high, so the trend, the downtrend, is still intact. This is still a downtrend. The structure tells us this. And then goes down again, a lower high is created. Now, the level we're looking at and what becomes important is the last high. Okay, this area here. All right. So, yeah, let's zoom in a little bit. So this last high here. All right. So this will be interesting. This daily candle currently is still forming. So if this candle closes inside this area here, then the trend is still intact. If it doesn't and the candle closes above this area, the market structure has changed because we have a new higher high. All right, so this example, you can see the market was in an uptrend, structure changed, become a downtrend, and now this area here is very interesting, very important, because this will tell us if the structure is still in place for a downtrend or if the structure has broken and it could potentially become an uptrend. Okay, guys? So let's look at another example. So this is the New Zealand US dollar and the Japanese yen, a different time zone. So this is the H4. So each candle is 4 hours. All right. So this area here that I've highlighted, you can see this was once in an uptrend. And if this low is broken, as we've discussed, the structure has changed. All right, so you can see price breaks that level and it breaks it quite heavily. Yeah, so it really comes down. So then we have a lower low is formed. Then we have a lower high, a lower low, a lower high. A lower low is not created. So when this happens, guys, last high becomes the important level. Yeah. So we then need to ask about if a lower low isn't created, is the structure starting to change? Is the trend starting to change? So if this lower high is broken, which it is with this candle here, then structure has changed. Again, we don't know what it's going to do. It could go back into a downtrend, a sideways market, but as you can see, it starts an uptrend. So we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, so it's now in an uptrend. Okay, but the important level is always this, yeah? If a lower low is not created, then the last high becomes the most important point of reference. If that's broken to the upside, the structure has changed. So we've looked at uptrends and downtrends and how the market structure has changed. It's gone from an uptrend to a downtrend or vice versa. So now we want to look at an example of a sideways market. Again, yeah, you can find these on different time frames. All right, so then we're going to look at the pound sterling against the Australian dollar. This is the H1. So I think you can see here, this is quite clear that this is an area of chop. I like to call it chop, where price is just moving up and down sideways, not really going anywhere. So let me put a rectangle on it just to highlight this sideways market. Yeah, so in this chart, lots of sideways action. Price doesn't know where it's going until, boom, we have a large red candle. As you remember from my last tutorial, this tells us that sellers are in control, okay, and the market is taken lower. This area here, okay, so let me draw a line. So the bottom of this choppy zone, this sideways market, has now shown us that this line here is an area, it was once an area of support, but is now an area of resistance. Sure enough, you can see this H1 candle at this zone is a large candle, sellers are back in control, and eventually price is taken lower again. All right, so this was from my last tutorial, guys, so take a look. But this is a perfect example of a sideways market. But eventually it will break out of a sideways market. And then price is coming lower. It's now become a downtrend. All right, guys, so yeah, we've looked at uptrends, downtrends, and sideways markets on the live charts. I hope that helps illustrate what you are looking for in terms of trends and market structure.
So in summary guys, we know the market will be in three states: an uptrend, which is higher lows, higher highs, or a downtrend, lower highs, lower lows, okay? Or a sideways market, no highs or lows are formed, the market just chops sideways. If you remember back to the candlestick tutorial from last week, I said to you your number one job as a trader is to know who is in control. So if the market is in a downtrend, we know the sellers are in control. If it's in an uptrend, buyers are in control. So if we know this and we combine it with a strong bullish or bearish candle, these can be some really good entries for your trades. As always guys, if I can ask you to subscribe to the channel and like and share this video, that would be greatly appreciated. Okay, thanks guys and see you next week.